You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Vol Views, the portion of the program, or I should say the portion of our broadcast week here on the network, where we try to view some volatility. And oh man, do we got some on the docket to view today. Man, if you don't like the vol level, just wait. Not even 5 minutes. Wait 2 minutes. We got vol all over the place, screaming up, screaming down, hither and yon. Exactly what you folks out there love to see, or maybe you're terrified, maybe a little bit of both. I wouldn't fault you in either direction. Either way, we're here to help you break it down. You can, as always, join us live every Friday, noon Central, via the old Mixler link. That's the easiest way to get it in your ear holes instantaneously if you want to listen to us while you're trading and trying to make sense of all this freaking madness going on out there, quite frankly. Then that's the best way to get it. Of course, the podcast is also your friend if you're on the commute or wherever else. You guys know how to find it. And of course, as always, hit us up. We know you have a lot of questions. Who doesn't in this volatility regime? We're here to help you. We'll have a little kumbaya session here on the old Vol Views, try to work through some of the issues in the world of volatility. And to help me do just that, first off, we are joined by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. You got a good one today, sir.
Wow, what a day. This is some of the craziest action I've seen. Right now as I'm talking to you, we have the Dow down, the NASDAQ down, the S&P down, the VIX down, VVIX down, VXN down, and RVX down. We have the Russell 2000 about to go green. And yeah, it's green. Russell 2000 just went green. And this is today so far is some of the craziest price action I've ever seen in my life. You know, Alicia, my director of operations, was a floor trader for a nice chunk of time too, and she's kind of in the same spot. I don't know about you guys, but I cannot remember the last time that we had this kind of a crazy buy program step in.
Yeah, this is all sorts of crazy. Also joining us to help us break down the crazy, the madness, we got Mr. Dave Lincoln, a.k.a. the host of the Short Vol Show. Dave, welcome back to the show. You know, I was going to give you a hard time at the front about your show being it's a rough time to be talking short vol, but, you know, just wait 5 minutes and it all works out, right?
Yeah, exactly. Somehow I managed to sneak my way back on your show once again, and I'm very excited about that, to be back here. And yes, this is a great time to be talking about volatility because, like you said, everything going crazy. You know, yesterday we looked like we were kind of rallying, but then right towards the close, someone really put the hammer on things. And we're way down this morning, but we've just had a huge comeback, like Mark was saying, with everything kind of back almost to unched here. Amazing.
Yeah, it's pure crazy town. So let's get right to it. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. We kind of just touched on it. It's almost hard to review what's going on because it is changing ever so quickly here on the screens, but Dave and Mark kind of ran it down for you there. Yesterday, of course, we had the big rally throughout most of the day, kind of ameliorated there toward the end of the day, and then today we open up firmly in the red. Most of the major indices off 1%, if not more. And then as the day has turned, we saw VIX Cash, of course, spiking, getting up as high, what was that, 27.5? 27.52 actually. We saw VXX spiking as well, getting on up there to, how high do we get there? North of the 40 handle. 41.66 was the high. We had the futures just bid to crazy town. There was about a 4-point premium. So I think super backward was a technical term at one point to the cash. Nearly 6-point premium going out 2 months cash to the 2 months out there. So it was just super backward as the day is long. Now, fast forward a few minutes here, and we're seeing a lot of that reversing. VIX Cash actually red on the day now, right around a little bit shy at 23.5 now, 23.44, sir. So actually off about 3/4 of a handle. So yeah, about 4 handles or so off of that high it just set not too long ago. VXX back below the 40 handle, actually 38.91 now, so only up a handle. We've got most of the major indices still off firmly, but nowhere near the extent of, let's see, S&P. Yeah, about S&P, SPX is now, 60 handles off the low that it printed earlier this morning, and about 20 handles north, or close to it, about 18 north of where it opened. So just all sorts of craziness afoot here. Let's start with our guest, Mr. Dave. You picked a good one to come on this week, sir, because we got some vol to talk about. What's been catching your eye out there this week, sir?
Well, I've just gotten a lot of calls from viewers who have shorted this stuff too early and have gotten kind of run over. I've had to go back to basics with a lot of people and tell them to kind of look out farther if they're going to short stuff. I've just been trying to kind of walk a lot of people in off the ledge here with the craziness going on.
There you go. Well, you call your show a short vol show. People are going to come for one thing, right? They're going to come for one direction. And so, yeah, when that doesn't work out or when there's initial pain in that, then there's a lot of issues. I certainly see that. A lot of people were in there. A lot of people have been trading up a lot of different things like VXX and others on the downside. And you're right. If you got in there too early, it has been a bit of a rough road. But all sorts of fun stuff popping off today. Mr. Meatball, try to encapsulate it if you can. What's been catching your eye this week from a vol perspective, sir?
Today. We went from an incredibly steep backwardation to just some of the nuttier. Actually, hey, Mark, 1 second. I got to look at a trade.
Go for it, sir. You got to buy more of those VXX Jan 10 puts. I know what you're up to, but getting shows on those bad boys there. But you're right. The backwardation was just insane, even coming into showtime. I said we're talking like a 4-point premium in the front month contract, 6 points talking cash premium to the front month contract, obviously 6 points if you go cash to about 2 handles out. Right now, that has come off quite a bit as well. Like I said, the cash, right around the 23.5, a little bit north level. We're seeing that front month future right around 21. So you're talking a little bit more than 2.5 handles now. So that's coming substantially out 2 months. The cash is not even 4 handles, about 3 3/4 handle premium there. So just in span of a half an hour or so, we've seen all of that coming in kind of across the board. Also, speaking of coming in, our old friend VVIX, aka the volatility of VIX, also at least lower than it was today. We hit a high of about 120.5 coming into showtime, was right around 120. Right now at 111. Which is interesting. I think the realized 30-day out there, which I love to say because I know it drives our friends in Volex land and real day crazy to even think of the notion. It is kind of silly when you think about it, the realized volatility of VIX, but that's a conversation for another day. North of 170 coming into the show this morning. That's 30-day, obviously. So all sorts of just craziness abounding. Dave, what's kind of what are some of the indicators you're really fixating on right now? And obviously we have the futures moving around like crazy, super backward, then a little bit less so. We got VVIX, we got a bunch of stuff going on. What's on your personal radar here that you're watching right now?
Well, I've been looking actually a lot directly just at the E-minis underlying how they trade and the NASDAQ, really getting back to basics and just looking at what's going on in those two indices, because those sort of drive everything. Like you talked about, I have looked at the VVIX a little bit, but doesn't help me out that much. Yeah, down 2 now, the VVIX.
Yeah, well, I feel like, I missed kind of the front end. VVIX is one that I do pay attention to as kind of a gauge of where we are in a panic cycle. It's not great I don't think it's a great intraday indicator, but I think it is on a day-to-day basis. Does that make sense?
It does. And now that you're done gobbling up all your Jan 10 puts, or what was catching your eye this week? Obviously a lot.
I just got shown, actually. A customer is trying to buy the 245 puts 1,000 times. He's trying to sell me 3,000 of 240 puts, and he's trying to buy 2,000, then buy 2,000 of the 230 puts. So it's a 1x3x2, and he's trying to collect 33 cents. And I told Matt, I told Tubby, I said, you know what? He said, what? I go, I like his way better.
I'd say I'd probably be with him. That's 90% of the quotes you get in the S, you're like, yeah, I'm with that guy. I don't miss those days at all. Some dude's been working on some funky ratio. He's been planning for like a week, and he calls up with the exact way the pit has it on. I'm like, oh, yeah, I'll do that too.
It's amazing.
If you get filled, let me know. I want some of that. Yeah, that's
what I said. I actually told him, I said, you find someone that'll buy this, let me know. I'm in.
Second I heard that quote, I was like, okay, that's totally somewhere you're going to want to be with, because that's how it always breaks down out there. It's so infuriating. Like, yeah, thanks for wasting my time. I want to do that too. You just outlined my entire position. But it's funny. When's the last time you got shown like, hey, how are these puts just straight up in like the SM? It's never that. It's 1x3, by 2, by 6, by 2 months, by 1 month, by tied to futures, but on this delta, not that delta. Yeah. It's just there's so much of that joy.
You know what I have seen is a bunch of guys trying to buy way out of the money calls tied up to futures, and it just kind of makes it's nonsensical, but that's been interesting.
Let me guess, on some funky deltas too. They don't want to do it on like your delta. They want to do it like overhedged or underhedged or something crazy. So that's interesting in and of itself. It's a lot to parse. One of the things that we've kind of been talking about actually on our TWIFO show a lot, and one of the things I've kind of had in the back of my mind as we've been watching these myriad sell-offs and rebounds and sell-offs and rebounds, is that if the S was actually hitting the fan, as they say, if the market was really capitulating, if all hell was going to a handbasket, we would see, Vol was obviously up, but all the analysis you can do looking at the skew curve, we were kind of really just moving down the skew curve. We really stayed pretty tightly glued to it. And usually if all hell's going, is coming at you, then that's not what happens. You're exploding, Vol's going off, you're way off where, the skew curve is just a plot, just an estimate, right? So that's where you think things should be when things are relatively sane and normal. But when things are crazy, all bets are off. And we didn't really see that all bets are off. We kind of stayed relatively glued to the skew out there in the S&P at least for the better part of the last few weeks. And that's been a little surprising to me and kind of made me wonder if, this was not quite a tempest in the teapot, because it's a strong tempest, but it didn't seem like it was, pure capitulation either. Mark, did you have a similar thought watching the skew levels out here that this maybe wasn't full capitulation?
Yeah, I mean, think about this. We were at the lows of the day, right? The low on the S&P on the day is, let me look. The low on the day for the SPX is
26.28.
Yeah, 26. 28. And on that low is about 100 points lower than when the VIX touched out at almost 29 on the 11th. And we could not even break 20. We could not even break 28. We barely broke 27. There was this entire time we've moved on the skew curve, and hedgers have sold their positions into this market, which is unique, and that was kind of unexpected. You would have thought that we would have seen all kinds of vol run, but there was nothing, no fear at all.
And Dave, obviously you, as the name implies, you like to lean on the short side of the curve. Have you been fading this throughout? Have you been waiting kind of for your moment? What have you been doing out there in short vol land as we've seen these kind of repeated shocks to the system, then retreats again?
Well, I've slowly been building up a position, shorting this out towards January. But yeah, when you're talking about that sort of orderly sell-off, the fear I have all the time is just back to 2000 to 2002 when we had just that slow grind down for months and months and months. And I'd in a way much rather see capitulation and then a rally than just a slow grind down every day. And I'm not sure if we're getting in that situation yet, but I think of that period right now a little bit.
Yeah, it's funny. Everyone seems to get jumping on. We've been talking about this for a while that, I think, Mark, you said it last show and others, that, it didn't seem like VIX was really signaling, and obviously the skew wasn't signaling that this was the end. Bloomberg running with this recently, too. They're quoting, I think he used to be over, Pravit used to be over, I think, at Macro Risk Advice. Now looks like he's at Wells Fargo, I believe, quoting him. It's just a hint for anyone out there who wants to get quoted by any of these large publications. If you do the work for them, if you actually create the visuals for them, they will come talk to you, and they will make you the sole source of their article because you're doing all that heavy lifting for them, giving them charts and plots, and they're pretty much backing up what we've been saying here on the show for a while. This article, I think, was entitled here, what is this? A listless VIX says this sell-off reeks of dumb money. Now, this came out, I think, like last week or so it's a little bit dated now, but still, the analysis is there and talking about what we see here versus what was going on back in February, obviously, of this year. We're obviously much lower from a realized vol perspective, from a VIX level perspective as well. So they're kind of calling it here. And this was Bloomberg, I believe, saying the same thing we've been saying for a while, that, certainly the ecosystem isn't in place to make VIX pop as well. And it also didn't seem like a lot of other indicators are backing up that this is not the end of all things. Mark, this is kind of in line with what we've been saying. I'm surprised they didn't hit us up on this. I don't know who this guy is who wrote this. This is Luke Kawa. I'm not familiar with him. Maybe he's new to the vol beat. But this is the drum we've been beating for a while here on the show. That VIX itself is not showing that the end is nigh, right? Mr. Meatball, did we lose you? Are you buying puts again?
No, I was muted though. When I see the S&P down and the VIX down and the VVIX down all at the same time, that does not make me feel exceptionally bearish, except for in volatility terms. This type of move. I mean, we're still down in the NASDAQ almost 1%, in the S&P almost 1%, 0.5% in the Dow. Again, the Russell is now has been green today, the cash, and the futures are green. The Russell is now strongly green, and the futures, the S&P futures, and NAS futures are strongly green now. So they've swallowed up a lot of that vol. Just really interesting price action.
Yeah, this is, I think I tweeted out earlier, the technical term for this is crazy town, and I stand by it because it very much is crazy town. Let's see what's lighting it up out there, listeners. Surprise, surprise, it's a pretty active day out there in VIX options land. The ADV right now is just a tick shy of 600,000, 592,000. We're pretty much almost at that already. About 560,000 contracts on the tape here coming into almost halfway, not even halfway through the show here. About 5-to-1 calls outpacing puts here, as maybe the early furor got a lot of people excited. Also, a lot of people perhaps deciding, perhaps taking advantage of the opportunity to get out of some of that upside they've been putting on here. Either way, the call to put coming in a little bit, which is probably what you expect when you move to the upside. People got some upside, they want to take it off. Go figure, they want to take some profits. We're at about a 2.8 to 1, which was we were at about 3 to 1 a little bit earlier. And the rest of the week has been pretty active as well. Most of the day, except for Monday, at or above the ADV pretty much. Tuesday, close to it. 853,000 contracts on the tape. Yesterday, 781,000 on the tape. Wednesday, Tuesday, about 560,000 on the tape. Monday, the comparatively anemic day, only about 250,000 contracts going up. Overall, let's look at the top 10 open big size positions, the hot VIX strikes out there in VIX. Let's go from the bottom again. I like going from the bottom, mixing it up. And number 10 on our top 10, on the bottom of the list there, are the NOV 15 puts. You know, we've been talking 13 for a while. That was the hot strike. Maybe now in this new VIX paradigm, at these new VIX levels, 13, not quite so sexy. So we're getting the 15 puts on the list here this week. About 150,000 on the tape for our top number 10 spot, the bottom of the list. Number 9, the D17 calls, 153,000. Number 8, there they are, our old friends, the NOV 13 puts. Still playing, still alive, 156,000 open there. Number 7, the NOV 25 is $1.60 on the tape there. Number 6, the NOV 21s, 168,000 contracts there. Number 5, the Feb 37 halves. We've talked about these for a while. They've kind of been involved in some rolls, I think from Dece to Feb out there. So this is the new hot strike out there. 171,000 of those bad boys open. Number 4, the NOV 26s. 202,000. Number 3, the NOV 30s. I always joke at least, that there's always got to be a 30 call out there somewhere. This case, it's the NOV. I don't care what month, I don't care what VIX regime you're in, 30 calls are going to be popular. And 204,000 of those bad boys open. Number 2, the Dece 37 halves, going back to what I talked before about that Dece kind of Feb roll. 220,000. I think some of those going up today as well. And then the NOV 20s, taking our top spot this week. 261,000, a little bit north of 250,000. Total of about 7.5 million contracts open, about 2 million on the puts and about 5.5 million on the calls. In terms of what's lighting it up out here today, lots of weird stuff. Looks like we got maybe a funky NOV to Dece roll, or perhaps a bit of a vertical spread. Looks like the Dece 40 NOV 26. Looks like a bit of, at least they went up in blocks on a ratio. I'll have to see how the totals line up, but it went up 17,004 of the Dece 40 calls for 55 cents, pretty much right on the bid, versus the NOV 26s for 5,500. So not quite 3 to 1, but close. For $1.83, looks like paper lifting offers on those bad boys there. So perhaps closing out the NOV 40s, reestablishing on the Dece 40s, reestablishing on the NOV 26s. Let's go out to Dece and see how many of these total on the strike went up today. Total of 42,000 going up here today on this strike. So spoiler alert, a little bit of paper on these bad boys. By the way, a lot of that OI went up just in the past few days. Just 2 days ago, the OI was 13,000 on that strike. Now on the 25th, we saw 25,000 of these things trading when they were about 50 cents, and then of course today we see 35,000 going up. So it could be additive, but it could be probably maybe some very near-term profit taking going on here as well, taking advantage of that to roll to a meteor strike. We also see something similar, Dece 35, NOV 27. So maybe someone coming in deciding to take the upside off in Dece, given the opportunity, and then reestablish within closer, but much more meteor close to the fire strikes here in NOV. Looks like doing that on a bit of a ratio too. 12 to 13,000 of the Dece 35s for 82 cents. Looks like selling those versus buying the NOV 27s. Actually, there's 2 blocks of 8,300 going up there, so that could be the ratio the other way for $1.78. Let's see how many Dece 35s went up today. A total of 43,000 there as well. So all sorts of funkiness going on. Let's see, NOV 27s really quickly. These also, let's see, 45,000 of those hitting the tape today, and the NOV 26s, 31,000 of those bad boys. Of course, tons of OI on both of those strikes. Mr. Meatball, any funky VIX options, trades, or shows catching your eye today or this week? You still muted there, sir?
How did you guess?
You've been working with Andrew too long.
Yeah, you know what's interesting? There's a customer that keeps doing RevCons in VIX.
Really?
And I can't figure out why you would do that.
I can't remember the last time we saw size reversal conversions going up in VIX.
Well, I mean, it just doesn't make any sense.
No.
There's no cost to carry. Why would you do a RevCon
Why wouldn't you do it in SPX?
In VIX. Why would you do that?
Yeah, that's a mystery. Today's volatility mystery, brought to you by.
And I'll tell you, so we have seen some interesting stuff. We saw a big seller of a DC call spread, like 120,000, 22, 24 call spreads. Really, as what's been interesting is on all of these pops, every time we've popped in VIX, all my stream has been call sellers, which I think is kind of fascinating.
Yeah, that's you guess people are taking the opportunity, any pop they get, right, to just dump all the upside they have. Maybe they decide discretion a wee bit better than valor. Dave, anything catching your eye out here in the big VIX mothership options this week that was coming across your tape, or maybe some of your users or listeners are talking about this week?
Yeah, same thing. Overwriters. I saw someone selling VXX OC 40 calls yesterday. They dumped 10,000. I think it was like 40 cents. Then I saw somebody on the VXX weekly 30 NOV. They sold 12,000 NOV 52 calls, and it just seems like they're just giving away some vol at that level, overwriting this stuff.
Yeah, you mentioned it. Let's get to our other friend there, VXX. A lot of you guys slinging this one today, too. Just goes to show you why you don't prep for shows like this too early, listeners, because coming into the showtime, it was almost 41 in VXX land. Now we're back right around 38.90 or so. So several handles south of where it was. That itself was 6 points higher. Now we're about 3.5 points higher than where we were this time last week. The ADV out there is strong, as you might imagine, about 270, actually right now 294,000 contracts over there on the tape for the ADV. Today, obviously lighting it up, 635,000 on the tape today. Yesterday, 516,000, 399,000 the 24th. And of course, we saw 601,000 on Tuesday and Monday. Again, the anemic one, only 290,000, but still pretty much just about every day north or at the ADV this week. In terms of top spots out here, not a lot really changing. I'll just highlight some of the interesting nuggets out here. We mocked the No 45s. There were nearly 60,000 of those open. They were number 6 on our top 10. Today, some of that mockery could go away. Let's go see if our friend took advantage of a spike, or if he's still a true believer and if he's holding on to these bad boys. Let's see. No 45s. Today, they got as high as, how low, or high did they go, I should say. They got as high, they were trading 230 earlier this week, 235 yesterday. They got up, they only got as high as they got up as high as 295 today. So this guy had a chance to take these off for close to $3. Let's see if that's the case. And looks like a decent chunk did trade today, 23,000 of these bad boys going up for $1.70. Let's see if I could see where all the size was going up here today. Looks like, 12,691 coming in on the bid for $2.34. So that's a good chunk of them right there. That's about half of the volume. So it looks like maybe someone deciding to take a little bit off there. I don't know, Dave, or you like that one? Maybe if you got some upside and you were roundly mocked for it, and then it comes your way, taking off at least some of it, or would you be taking off the whole thing right now?
To take off some of it. I wouldn't be taking off the whole thing. But I don't know. I generally stay either flat or short volatility. I don't play it to the long side. So I guess if I had it on, I would take off the whole thing. But if I was a long player, I would probably do it in pieces. So we're seeing a lot of, it looks like a lot of volume today in that strike, as well as the 42 strike and the 50 strike. So a lot going on right now.
Yeah, worth noting, too, looks like someone gave up the ghost. We always talk about the Jan downside puts in VXX. Someone coming in and just crushing the bid 10,000 times for the 20 puts for 4 cents. I wish I saw that one. I would have taken some of those off his hands. I took more earlier at a little bit more higher price because I got things to do. I don't have time to babysit. But yeah, 10,000 for 4 cents. That's someone, obviously there could be ties with that. There could be other things going on to make that a better thing. Could be someone convincing a crazy desk to facilitate them and having them buy it all for 4 cents on the bid. Either way, they were 4 cents at 8 and someone printing 10,000 for 4 cents. Mr. Meatball, you like those for 4 cents? Would you put some in the Carmen line?
Considering I bought the 18s for 3.5 cents yesterday, yeah, I would have bought them for 4 cents.
Yeah, probably.
You think?
You should call up your broker, say, hey, give me that.
Yeah, no kidding. If
give
I figured
me
out
that
who
show.
That was, unbelievable.
I know you've been slinging. I know you've been doing some slinging in VXX. You got the puts. Anything else going on out there in VXX, sir? That's catching your eye? Or you've been up to these days in VXX land, sir?
I mean, vol is high, and it's moving around. It is not now is not the time to be crazy short. One trade I did kind of do that I got to look at that was interesting. I don't know if I said this at the top of the show. The November in VXX, 34, 32 put 1x2. I did that 250 by 500 times today. There's been a lot of volume on those already. I mean, just huge volume up and down November. So, I think that you can do some smart things like ladders and 1x2s, because one of the mistakes I think a lot of retail traders, they load up on puts thinking, wow, when VXX drops, I'll make a bunch of money. But they forget about the Vega component. Mm-hmm. And, take VVIX as kind of a gauge for where volatility is in VXX. Well, now take a look at your puts. If VXX vol is in 20 points, you need a way bigger move than you realize to do well on those.
No, yeah, I mean that's something we've been saying for a while. It's a slippery slope. Maybe I think we have some listener questions. Maybe we'll get to that really quickly now, Dave, because we get some variation on this question almost every week. I'll just encapsulate the theme for you now. Your show is the Short Vol Show, so you clearly deal with this on a regular basis. The question goes along the line, something like this. I got X short VXX on. A lot of times it's the puts. It could be some other funky things going on. But anyway, they're short VXX. And then they want to know what they should do on the other end for days like this, for the days when you want to have something in your back pocket, when VXX spikes and everything else like that. So I think we talked about this before, but catch us up. What is your preferred go-to? Obviously, you said you like to be biased short out there, but what is your in the back pocket thing to do for days like this?
Well, I mean, the call spreads are always a good buy out of the money call spreads, just because of the way the skew works. They're always discounted, so you can buy some out of the money call spreads. The higher up call that you're selling is always a higher price because of the skew, and so you can get really good value buying some out of the money call spreads to protect yourself. I would definitely say.
Do you do very near-term ones, like in the weekly for very specific scenarios? You go a little bit longer out to have a call spread in your back pocket for, let's say, 3 months or 6 months, something like that?
I like to actually go into the weeklies and look for kind of massage my way into nice stuff, closer stuff that's really cheap. Yeah, because that can work out in your favor. It can get really cheap in the last couple of days before expiration.
And then, of course, let people maybe buy a little bit farther out, like a monthly or a couple months out, and then they sell the weeklies, right? So they leg into calendars. Do you do any of that as well?
Yeah, that can be interesting too. I don't usually do that, but I definitely hear about people doing that. It's interesting, while we're on the subject of VXX, there's a lot of questions about the name change coming up as we're getting closer to January now. And so I like to always talk about how the name change is coming up, and how liquidity should increase. Because a lot of people are asking me, why isn't there options after Jan right now in VXX, and what's going to happen? And so I point people to VXXB and say that liquidity will increase soon in those options as they come online more and more.
We've touched on that, but let's do a quick overview for that again, because obviously some people have short-term memories. They're fixated on what today's vol is. Obviously, what's happening post-Jan with VXX, and what should people be looking out for?
Well, just like I said, that people point to the fact that there's no liquidity in the options right now, but that will change as they come online more and things get closer and closer to that date. So Rest assured, they are exactly the same thing, basically, and so don't be confused by the name change. It will operate exactly the same way.
Of course, you're referring to VXXB. I mentioned before the ADV, many hundreds of thousands in VXX land. VXXB, the ADV options-wise is 429. Today doing a whopping 1,695. Let's just do a quick scroll here to see where all the paper. 100 lot of the no 35s in VXXB. What else we got? 100 of, yeah, that's looks like the big the big print of the day here. Let's just go really quickly. Not a lot to really oh no, there's a vertical in March 2019. 440, 38 put spread going up 440 times. That seems to be the lion's share of the paper out here. So a bit of a longer term March vertical, put vertical out here as well. Fascinating stuff. Mark, I'm sure you get a lot of questions these days in the pit chat too about VXXB. Anything you want to add here before we keep on rolling?
Yeah, I mean, I'm guessing that I'll probably just change. Its symbol will just go to VXX when it becomes the main one. They probably won't keep that B around. And that will likely happen as we get toward the end of the year. You know, this thing goes the regular VXX goes the way of the dodo with with Jan expiration.
Yeah, it would be kind of confusing if it was the only VXX around and it was still VXXB, huh? People would be like, huh? What the? All right. Yeah, we're talking about ETPs. We've been saying for a while that the annihilation that took place in that space back in February has had some lingering impact. Other places picking up on that now. Bloomberg running with that this week, saying again, this week's fare, nothing like what we saw in February. They look at the data here showing about 527 million in what they term short vol products here versus about 6 times that much going into the February run up. So again, 527 million right now versus about almost 3.5 billion in take your pick, your XIVs, all those other products that were going on out there preceding the big explosion in February. Of course, we all know how that played out. We all know the exacerbating effect that the unwinding of all these inverse volatility products had. So one of the reasons that there is so many fewer assets in short vol is because there's fewer products to get into. And the ones that exist these days, like SVXY, are neutered pale shadows of their former self. So a lot of that having to do with just the wreckage. But that kind of shows it in stark contrast there, just how little money comparatively is in the short vol space. And obviously there's other ways you can look at pure short vol. We obviously look at a lot in the volatility and the option space. That's where we like to play. And of course in the futures. But if you're looking at just pure ETP sense, then right now we are pretty much at the low point of the year for terms of assets in the short vol ETPs. They've been kind of obviously a big spike in February, and then they've kind of got neutered, and they've kind of been just trending lower pretty much ever since. Well short of $1 billion out here. Interesting thing before we keep rolling. A lot of interesting articles people are sending us this week. Another one here this is Brian Kelly with Forbes. I think he's coming on the network next week, I think. He's a CNBC guy, I do believe, if I have the right name. And his contention here is that forget VIX, the dollar is the new VIX. Interesting article. You can check it out. He also adds in a Bitcoin connection there because he is a crypto guy after all. But he's been hammering on the idea. He says that the fear gauge is outdated. The dollar is really the new VIX because it measures risks to the system that VIX does not. It's a lengthy article. You can check out the full thing for yourself. But basically what he summarizes here is that the dollar is still the reserve currency, and the IMF and others are going to lend in dollars. And when the dollar gets a little bit juicy, that becomes challenging, and lending activity in a lot of the emerging markets dries up, and that has global ramifications, what he terms a negative feedback loop here into the U.S. It curtails bank lending, slows down global economies, which in turn feeds back into the U.S., increases default rates, et cetera, so on and so forth. So an interesting idea. He goes on also with some crypto connection. I won't bore you with that, listeners. I'll get to that with him probably later next week about how the Bitcoin is the new dollar. You've heard that before, I'm sure. Mr. Meatball, you like this? You like this idea? Forget the VIX. It's the dollar is the new VIX, sir.
The dollar is the new VIX. How does that make sense? That that when the dollar is going up, that's risk off, and when the dollar, I mean that's existed within the yen for years, right? We all know that the yen gets stronger when it's risk off, right? So, do we think the dollar has similar characteristics? Well, maybe. I think that there is kind of you've got to think about kind of what environment the dollar is right now with interest rates rising. I think it matters, but the idea that the dollar is the new VIX, that's like apples are the new oranges.
I'll tell you what it is, though. It's a good headline because it gives you a dollar, it gives you VIX, and he got crypto in there, too. So he hit 2 of the 3. All he needed was like an Apple or something in there, and then he was good, or Amazon. And he hit the trifecta of things people like to click on. So headline-wise, I can see how it makes sense. You're right. The underlying, I'm not sure. Dave, are you buying or selling this dollar as the VIX idea?
It sounds like he has some interesting concepts in that article, but yeah, I was about to say apples and oranges right when Mark said it. So yeah, just different things, but it sounds like he draws some interesting parallels in that article.
Let's hit on it really quickly because we hit on it a lot on Option Block yesterday, of course. But it is earnings season. Sometimes these things get lost in the wash when there's so much macro madness going on out there in the old S&P and other broad indices. But we were talking yesterday, names like WWE disappointing and others. We had Twitter having a big move earnings this week. So a lot of big names popping off. Microsoft having a big move. And going into the close last night, we saw some big names ready to go. We saw Amazon. They're pricing in right around 6% or about a little over $100. And spoiler alert, today they're priced in 102. They're off 104. So right about 6%. So that straddle looks like, at least right now, was pretty accurate. Let's see, how much of a range do we have? We got down to as low as 1,600. So it was 80 handles off that at one point. So I guess it was a tense moment for the premium harvesters out there. And he had as high as about 100 handle range today out there in Amazon post earnings as the market digesting what they put out there. Also saw the parent company of Google, aka Alphabet, aka Google. They also are pricing in about $60, so right around about 5% actually. And in the after hours, or I should say today actually, they are off 0.5%. So not quite a lot of movement. Today's range looks like they had about a 75 point range out there. So they had some movement as well. So if you were short and premium out there, you were gritting your teeth. Right now, though, looks like things are coming in nicely. Things are kind of unched out there. So some big names popping off this week. I don't know, Dave, do you watch a lot of earnings vol? Obviously, it all accrues into the macro at the end of the day, so it all is a factor for you. But do you watch any individual names, maybe some of the bigger S&P ones because they are such market movers?
Certainly, and I was watching very closely after the close Amazon and Google yesterday. And Google, as you said, came back a lot today. Amazon, not so much. But yeah, I definitely watch those very closely, especially these big ones as market movers. I'm looking forward to Facebook coming up. That's one that I pay a lot of attention to as well.
Yeah, good old Facebook. Let's see, when are they popping off here? They are coming up on the 30th. Yes, so next week. So we'll be talking with them on the old odd block next week. They're hovering right around south. They're off 2.2% or another 3 handles. Yet another challenging day in the recent history of Facebook. That recent earnings high of, what was it, almost 220 seems so far in the rearview mirror now. They're shy of the 150 level right now, 147.5. So a big drubbins going on out there, to use a technical term, out there in earnings land. Let's see, though. We got some time here. Let's see what you crazies have on your mind. It is time for some volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Vol voicemail. This is your portion of the show. Well, the whole show is really your show, but this is your direct portion of the show. You hit us up, questions, comments. We also turn the tables on you guys, ask you guys. People are already tweeting about the dollar on VIX. We'll get to that in a second. First, let's see our poll. Our question of the week is, sticking with the earnings theme, just to make it a little bit micro, you guys who are tired of macro, we asked you quite simply, what are you trading this week? What's the big name on your docket? We gave you 4 choices: Microsoft, Amazon, Alphabet, or Twitter. And as of the end of the week here, it's coming up, still got a day or so left, but most of these big names have all reported. The big winner so far, Amazon, which is kind of the one I picked at the beginning of the week. Earlier this week, though, it was a surprising resurgence, I should say, for Twitter. It was dominating early, and then Amazon took the lead. Right now, it's Amazon number 1, 34%, tie for second place with Softy, and Twitter at 28%, and a distant third for Google. We keep throwing it in there, seeing if it gets any love, and it never gets any love. I don't know, Mark, we talked about this before. Have you noticed that the kind of Alphabet post-Alphabet is not really what it used to be from an options perspective, at least? Mr. Meatball, are you dead, sir? Did we kill you? Mr. Meatball, I believe, is running off to the restroom. Mark, Dave, just to throw him under the bus there. Dave, have you noticed that Alphabet, not quite the volatility machine it used to be, or the options volume machine it used to be pre-Alphabet?
Yeah, I don't follow this one that closely, so I would have to. I don't want to make something up. I don't really follow Google that much. Is that what you've noticed lately?
That is, yeah. You've listened to the Meatball for a long time. He just makes stuff up. Go with what he does. He's not afraid of making stuff up. We got a lot of people chiming in here on the show. We talked about the VIX. The dollar being the new VIX. Our buddy F Contango Trader, I think he chimes in on every show. We love those chime-ins. Hit us up. He says, the dollar is the new VIX as long as you have them in your pocket. Yeah, I guess. There you go. So he's a fan of the old cash. Don't tell that to the crypto folks. They look down their nose at fiat. They call it fiat. They don't even call it, currency or money. It's fiat. You hold fiat? You don't have a jump drive full of Bitcoin in your pocket? Shame on you. He also says today was not the exception with the VXX Nove 26 straddle was $2. Now the move was way over $2. So congratulations there. If you were long some VXX straddles, you're looking pretty good as long as you took them off there. Let's see what else we got here. We got a lot of chime-ins on that stuff. He also says VXX is going to be under 40 by the end of it. We're already under 40 there. Cube Finance. He says, do we smell the distinct odor? He spells it, must be British. He spells it with a U. Odor of feedback loops about to take off. I think this came in late last week on Showtime. So he had it for a while there. Of course, feedback loops refers back to what the Wall Street Journal infamously deemed last year what they termed the short vol kind of volatility feedback loop. They said everyone was short, and if we started popping, everyone was going to be scrambling to cover, and it's going to exacerbate the upside move. And we saw some of that in February. A little bit less of that as I mentioned now. So not as much of a feedback loop to worry about if you buy into such things. But that said, we did see a little bit of a pop there for a while, and it did get exacerbated very briefly. Not quite as crazy as some might have hoped for or thought. But still, maybe there was a distinct... Dave, did you smell the distinct odor of volatility feedback loops about to take off this week?
No, I think we're in a different situation drastically than we were February as far as, the ETPs being over leveraged and whatnot. That's not a problem anymore. That money is off the table. And so we're seeing a much more sort of pure market move now than what was happening in February.
Yeah, I agree with you. I think what we're looking at is what would have happened in February if we didn't have the ETPs blow up. It would have been a lot more like this, pretty orderly, not a lot of panic, and I think that we would have seen kind of that type of price action. The same driver is really behind both of these interest rates, right? That's really the driver. They'll say, oh, it's earnings. It's interest rates that is moving everything. And, I think what you're dealing with here is what we would have seen if vol had not completely been over-levered.
So what you're saying is the dollar is the new VIX. That's what I hear you saying.
The dollar is – no, Bitcoin's the new dollar, and dollar's the new VIX.
There we go.
So Bitcoin is VIX.
There we go. It all ties back.
You didn't know that?
That's going to be the title of this show, Bitcoin and VIX. and everyone will click on it and download it and love it.
VIX coin.
Yeah, oh, there we go. VIX coin. You know the CBO's working on that right now. VIX coin. We're stealing their thunder here. Darren Hom, he says, VXX and the index it's based on provided a statistically significant exposure to shorting straddles. This was not the case for XIV, presumably because of the volatility drag. Is it that bad that XIV is gone? He includes a chart here. We'll include it in the show notes for your listeners so you can see it. It's pretty lengthy, a table actually. I won't get it. He gets into all the R squared of VXX versus other things out here in the products. Interesting stuff. And this is kind of something we talked about before. I think he's writing in to what we were talking about before about shorting straddles and using the S&P as maybe an alternative to doing some of these things. That he likes his way to do it was in VXX. I don't know, but his question is one we kind of talked about a lot here on the show. At the end of the day, is it that bad that XIV is gone? I think it depends on your viewpoint. Right now, if you're concerned, if you're in the short vol camp, you don't want those exacerbated, explosions to the upside. Then maybe not having XIV around has been a notch in your favor. Of course, you have one less vehicle to do it. XIV did make it a lot easier for a lot of people. Probably you could argue too many people to get in on the short vol trade. Just given our anecdotal feedback we saw alone on after that explosion, way too many people were in that short vol trade that really should never have been. So maybe in that sense, it's a good thing. I don't know. Let's start with Meatball. Meatball, you think, A, are you buying what he's selling here, that VXX was statistically significant exposure to shorting straddles? And also B, his corollary, is it that bad that XIV is gone?
One, it's not that bad that XIV is gone. I don't think it matters. And yeah, shorting VXX is essentially kind of like selling a straddle. It really is. The only difference is that, when you short, that's what a straddle is. It's really not shorting a straddle. It's shorting a dynamic straddle. So the straddle is constantly moving, and what you're betting is that even as that straddle is moving, it's contracting. So it's not exactly the same as selling like an at-the-money straddle. In that respect, I think that's wrong. But it's much more kind of a dynamic straddle, shorter like the vol portion of a variance swap.
Dave, same questions for you. You agree with this guy? And is it that bad that XIV is gone at the end of the day?
Yeah, there's a certain amount of risk out there, and it gets spread out in different ways, whether it goes to XIV or VXX, or it goes to the SPX puts, or there's a certain amount of risk. And, the more people it gets spread around, the better. So in a sense, having less vehicles to spread it around may be worse. But in a way, there's a lot of people that shouldn't have been taking that risk. They were in XIV. And so in that sense, it's better that it's gone. But in the sense of having more areas to spread the risk wider, it's better to have more products generally, I think, in the long run.
Unless they have what do they call it? An acceleration event in their prospectus.
Right.
Unless they just say,
hey, a cagey answer, but
unless they say, hey, there's this lurking time bomb in here that could go off at any time. We'll call it something euphemistic like an acceleration event. But just be wary of that. This whole thing this whole rug could come out from under you. And spoiler alert, it did. All right, let's see. We got so many questions, as you might imagine, given the environment. I think we got time for one more quick one here. I think we should probably do an all questions episode someday because we got so many good ones. This is along the same theme here. This comes from PRGR0. That's a good one. That's a good handle. He just wants to know, SPY or SPX better for straight vol plays like straddles? Well, our audience got straddles. S&P straddles on the brain today. Well, there's a lot that goes into this one. We can probably fill some time with this question as well. Short answers, if you like size, SPX is definitely the place to go. Also, don't forget 60/40 tax treatment. That's a lot of people who are doing size in the S. They care about things like that, so that makes the S also the de facto go-to for a lot of that type of paper. But if you're smaller, retail Joe, don't care about 60/40 or doesn't really affect you, you need smaller size, and you don't really want the hassle of having to, delta hedge with the future. You think the SPY underlying is a lot easier for you. Then that, functionally, that could be a much better choice for you. I think it kind of depends on what you're slinging out there. There's no real naked answer, but I guess the boilerplate rule of thumb is size, go SPX. If you're doing small, don't care about tax treatment. don't want to hassle with futures than SPY. Mr. Dave, we'll go back on the horn the other way. Dave, what do you like better, SPY or SPX for straight vol plays like straddles?
Well, I mean, Mark, you really answered that question for us, I think. I don't think I could have said it better than you. I mean, if you want efficiency and you've got size, then go to SPX. But if you're just a small retail person, SPY is probably an easier thing to deal with.
And speaking of things that are easy to deal with, this week's crystal ball was not. We're going to get to it anyway. It is time. Yeah, I know you've been waiting for it, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball. This is, in many ways, the most challenging portion of the show. I tweeted it out before the show. I said this week in particular was far and away the most challenging crystal ball segment we probably ever had. Just trying to prognosticate all of the many and varied nuances that have been driving volatility hither and yon over the past week have been super challenging. I think at one point we touched all levels this week. I think at one point we were all pretty much right, and then we were all, I don't think the 16 quarter came in, but close. And then we were all fading, and spoiler alert, we did not take. But even if you even asked the crystal ball this morning, it's super hard. In fact, as we're winding up the show here, VIX Cash cashing a bit again, up about a little more than half a handle, 3/4 of a handle, right around 24.85 or so. So it was off, and it's up, and it's down. So even predicting VIX an hour from now or 20 minutes from now is a challenge on a day like today, let alone a week. So spoiler alert, I gave Andrew a hard time for being 6 handles off last week. This week, we're all 6 handles off, so I give myself a little bit of a hard time, too. All that a long way around to saying, Dave, since we all screwed the pooch last week, you get the somewhat dubious honor of going first, sir. What do you feel in your bones for this time, 1 p.m. Central, next Friday, sir? VIX Cash.
Oh, boy, I feel like I'm on the Price is Right or something with this one. Well,
we actually don't do Price is Right rules.
We do not. We do not.
Okay. I'm going with 1850, Bob.
18. Just for that.
1850.
Bob for 10 years. It's Drew Carey now. Don't you know?
Okay. I'm sorry. Be sure to neuter and spay your pets.
It'll always be Bob to me. It's just Bob's the man on that one. But you're right. Just for that, we're going to do.
Happy Gilmore was quite possibly the greatest use of Bob ever.
That might have been. That was because he's fighting the guy. Yeah, that's right. I haven't seen that one in ages. Mark, I'll be charitable because none of us really hit it out of the park. I'll let you go next. What do you got for this week or next week?
Oh, well, I'm gonna say. What did you guess last week?
I'm not going to tell you because you're going to scam it.
I'm going to say 17.25.
You were close. I was 17.75 last week. So yeah, I was not too upset with my level for this week for next week. But since I let you go first, that's what no good deed goes unpunished here on Volatility Views as Mark comes in and scums me to the downside. But I was actually feeling a little bit more upside as well. So I'm going to give myself a little bit more juice to the upside, not a ton. I'm going to say 18.15. That's close to Dave. But hey, you know what? C'est la vie. We do what we got to do here on the old crystal ball. So if you're wondering what our market is for next week, listeners, we're 17.25 on the downside, 18.5 on the upside, and I'm there. Not quite Goldilocks in the middle there at 18.15. You got your own guesses. I know you do. Hit us up and let us know what you guys think for this time next week. All right, listeners. This was a fun one. Hard to believe an hour has already flown by, but it has. If you guys have more vol questions, I know you do. Hit us up. Keep them coming. If you have your own predictions, hit us up. Keep them coming. If you want to just, have that one of the hosts for something they said, go ahead. Why not? I'll let you. I'm a nice guy here. Either way, hit us up. We do like to hear from you guys. But before we go, let's go back around the horn, see what everybody's got cooking. Dave, if I want to check out the Short Vol Show, what else you got going on? Where should I go? What should I do?
Go check me out on YouTube on Short Vol Show. Under David Lincoln on YouTube or under The Famous Dave on Twitter.
That's famous, F-A-M-I-S. for that's not even the British spelling. That's like, I don't know, the Australian spelling maybe of famous out there. It's the THE famous FAMIS Dave on Twitter. I think he's just famous Dave on StockTwits if you like that platform as well. Oh, F. Contango writing in, his guess is 19.5. So there you go. That's our first audience guess for this week. We'll see. If you guys feeling your bets, send them in. Mr. Meatball, if I want to learn about these things, or maybe I want to get some shows in VXX Downside, where should I go? What should I do?
Yeah, come to optionpit.com. If you go to optionpit.com/weekly, I'm doing a presentation on weekly and daily options this Tuesday at 8:30 p.m. Eastern Time. And if you are a sophisticated investor interested in learning a smarter way to trade the S&P 500, reach out to me. While the S&P was tanking today, I was slapping fives with my director of operations, Alicia, because our hedge was working.
There you go.
Slapping fives. That's technical.
There you go. Put some hedges on. Slap some fives with the crew over there. It's all at optionpit.com now. It's all been brought back into the mothership. Optionpit.com to check it all out and sign up for some good stuff. Maybe you want to check out Andrew's Vol newsletter. That's there as well. And on behalf of the Meatball, let's give the Rock Lobster a shout out too, just for the heck of it. I'm a nice guy today. I'm feeling good. And of course, Dave over there at The Famous Dave, or the Short Vol Show, and indeed myself. I want to thank all of you for downloading, streaming, subscribing, sending in such awesome questions. Keep them coming. Your guesses, all that good stuff. We love it all. We love to hear from you guys. We'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.